What's going on, guys? This is Foresight Capital, and today I wanted to give a quick update on rocket companies because I made a video a couple of weeks ago saying that towards the end of December or beginning of January, I thought we would break out of a downward wedge and start to trade up, and it looks like we've actually broken out of that wedge a bit early and are starting to see an uptick in the price. So I wanted to give a quick update on my thoughts on the current trend, the current setup, where I'll be buying, and ultimately what my price target is for rocket companies in the coming days and weeks. All that I ask is that if this video brings you value, give it a thumbs up and consider subscribing because I'm going to make more content on rocket mortgage, rocket companies in the future, as well as other stocks like this. So the wedge that I've been referring to for the past couple of weeks really started back at the beginning of September when we saw a big sell-off post-earnings, and this was an earnings report that a lot of people thought that rocket companies crushed, and they've subsequently sold off pretty heavily from about $34.42 per share, which they spiked into just before earnings, to opening up at about $28 per share, and then seeing a very quick sell-off all the way down below $20 per share before finding a little bit of support in the short term, and then making a little bit of a rally. But again, we were sort of compressed by this downward wedge, and while we didn't exactly use the price point as resistance at that exact moment, we saw the price continue a trend downward to retest lows that were set during the IPO and in the subsequent days when we had a little bit of a sell-off towards the beginning of August. And then we saw an increase in price again rejected by this decreasing wedge. And I had mentioned that sometime in this area we were probably going to see rocket companies break out of that, because during that time we also had another earnings report back around November 10th that they again seemingly crushed, grew revenues substantially year over year, quarter over quarter even, and profit margins were absolutely insane. But again, we saw a bit of a sell-off and consolidation. We've now broken above that line though and had multiple consecutive days of closing above this downtrend, which leads me to believe that this downtrend is now over and we can start a new trend for rocket companies. So we saw the very first day open and close outside of this downtrend on December 9th, and that was right around $21.06 per share. And we've recently had a little bit of a rally up to about $20.40. So we've firmly broken outside of this downtrend, and what I wanted to talk about next was where I think that the company is ultimately going to take the price moving forward. So what I first see happening is a bit of a pullback, but I think we're going to move this longer term support from what was about $17.50 per share up to about $19.63 per share, which is this green line that's going across the screen here. I don't know that we'll fall all the way back down and test this red 1827, so I'm using this as a stop loss period for my trades. Now, I currently don't own any rocket companies, and in fact, I'm waiting for a little bit of a pullback. I'm not going to wait until we actually touch this green support line. I'll probably buy a little bit above that because we've also got $20 just above this 1963 support line, which is a pretty big psychological barrier for the stock. So I might start entering a position close to the $20 per share range if we even have a pullback that far. I'm going to see how it trades the next couple of days to determine if I think we're even going to see a pullback that far. But if we do, that represents a little over a 10% discount from where the price is currently trading and would be a great place to buy, as I was considering buying in here as I thought about potentially breaking out of this longer term trend a little early, and I didn't. And that's exactly what happened. And at this point, I would now be up 10% on that trade. So I'm looking for a pullback to the green level of support. And then I'm going to start setting my take profit levels. Now, we saw a very big sell-off from $34.42 per share, and then the gap down the very next day to about $28. Stocks tend to fill these gaps when we see a reversal in the downtrend that's created from this gap down. So we had the big downtrend all the way down to about $18.25 per share. We're starting to see the price come back up, and we tend to see these gaps filled, not immediately, but we see the stock rally back towards those levels. That's about $28.25, which is just under a $6 premium for where the price is currently trading, and from where I would be looking to enter, almost $8 per share, which is a very good take profit level, because remember I mentioned that this red line is no longer, I think, long-term support. I think the support line is going to be green, so I'm actually entering around here, setting my stop loss. This gives me about a $2 window, or $1.75 potential loss before I'm cutting my losses on the trade, as rocket companies could trade lower. And then I've got upside potential in this case of somewhere around $8 per share. So that's a little over a 4-to-1 risk to reward ratio before I even start taking profit. Now, realistically, if we don't see any sort of hesitation in price around this $27, $28 per share range, I'm taking off half as we break through that $27.97 per share range and push back for all-time highs. And then I'm going to take either another half of the remaining half that I didn't take profits on already, or potentially take all of the profits, depending on how we start trading around all-time highs. I tend to leave 25% of my overall trade on, so half of the half, just in case we see an absolutely insane breakout to new all-time highs. But, it's always something that's in motion. But that's basically how I'm setting this trade up moving forward. And I wanted to also show you some of the price levels that are dictated by Fibonacci to show you how well this has already been following the Fibonacci sequence. So remember, I'm buying close to 20 on a little bit of a pullback. If we don't get that, I would consider nibbling around $21 per share, but my ideal entry is closer to 20. So that we've got a very substantial 4-to-1 or greater risk to reward ratio, which is what I absolutely love, because that gives me the opportunity to be wrong a very high percentage of the time and still be profitable. So we saw this sell-off from about $34.42 per share all the way down. That didn't work. Give me just a second here. So we saw this sell-off from $34.42 per share all the way down to about $18.23. And I just wanted to show you how well we've been following this pattern and how well the take profit levels actually line up with the Fibonacci sequence. So the biggest level for the Fibonacci sequence tends to be the 61.8% retracement, which you can't see because it almost identically overlaps with this orange line at 27.98, and I drew my support and resistance line at 27.97. So that means that once the sell-off has retraced 61.8%, which is a very big number in the Fibonacci sequence, will be approaching that orange retracement line. That's a very good sign because most retracements happen at least to the 61.8% retracement level before taking another leg lower. That's why I want to set my take profit somewhere in that level. Not only was it a level of support or resistance before, but now it's also become part of the Fibonacci sequence as well. And we can also see how well we were following the 23.6% retracement line. So we used it as resistance for a couple of daily periods before breaking above it ever so slightly, but I think that was realistically to test this downtrend. And then we were compressed right back down below the 23.6% retracement range. Now we didn't actually come back and test the bottom again, but we came back and tested this 23.6% retracement period again, closed just under it for a day before breaking above it, and now have been using it as support. So this chart is following the Fibonacci sequence very closely, and I think it's a very nice setup if we see a pullback that we'll be able to enter at a discount and then have some very nice, consistent, solid levels in the Fibonacci sequence to take profit at. That also gives us a projection for future price. So oftentimes when we see the stock continue to rally after filling the gap, we'll see the price continue to rise to the 161.8% range, which is $43 per share, which is almost double where the current share price is. And then a lot of times we see that continue on to the 261.8% Fibonacci level, which is $60 per share. And that's actually in line with where a lot of people think that the stock should be trading currently. And I won't get into fundamentals too much, but the fundamentals are very solid for rocket companies, and they're not going anywhere anytime soon. In fact, they're showing insane growth, and they really shouldn't be compressed to this level. So even though I'm being a bit greedy and want to buy at a discount, there's definitely a lot of growth potential in this stock, and just looking at how the chart is laid out with how some of the patterns have already set themselves up, I think this is going to be a really great potential trade. But again, do your own research. Don't follow my trade or even the Fibonacci sequence, because it's not always right, and you don't want to risk money that you can't afford to lose. So follow the setup the way that you need to set it up for your own risk tolerance within the trade. This is just how I'll be trading it over the coming days and weeks, and the price targets that I'll be looking for. So again, I hope this video brought you some value, and if it did, give the video a thumbs up, consider subscribing and sharing it if you have anybody that you want to share it with. Also, leave me a comment down below. Are you buying rocket companies on the dip, or did you already own them and hold them all the way down? Thanks for stopping by. Catch you in the next one.